following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. At the break, we're going to have Arch Crawford on of Crawford Perspective. He's the Dean of Financial Astrologers, and he'll give us a little synopsis of what he's looking at. Plus, he's got a couple of interesting charts on the U.S. dollar and also on the advanced decline line that we want to talk to him about. So we'll see what's going on. The first chart that I want to post in here is the biotech index. This chart was brought to my attention by one of the deans of our Tiger Den, Mr. Z, and I hope he's getting through all the snow there in Philadelphia. But man, they've got a lot of it back east, that's for sure. It's really tough here. We got a lot of bad weather here in Arizona because we're going to hit 80 today. You got to put extra sunscreen on, which can really be a problem. But anyway, those are crosses we have to bear out here. We are going to get a little bit of rain here the next few days, but it should clear up for the Super Bowl, is what what really happened. Okay, now this biotech index really deserves our attention, folks, because this has a potential for a really, really good trade. As you can see, we have this pattern that is completing up here. This is a 3-drive pattern. It's also a pennant formation that's forming. But I wanted to go back a little bit and look at this, because if you'll see back in November, we had the 1, 2, 3, 4, 5 expanding triangle pattern that we thought was very bearish, and it worked. And the market actually went sideways for 10 days, just basically not even backing off 10%, hardly any correction at all. When you see that shallow 10-day sell-off, folks, that's a really, really strong sign of strength. It really is. So you have to, pay attention to that. And of course, the market did go higher. The worst thing could have happened was you would have broke even on the trade, but these patterns do fail. And there's certain ones that, that look better than others. That happens to be one of the best, and it worked for a while, but it didn't complete. But I wanted to bring the IBB to your attention, because this is the big biotech index. I'm not even sure which stocks are in there because I do so little in stocks, but it's got a pattern that really deserves our attention. The daily looks very interesting because of the pennant, but if we take some time here and go back and look at it on a weekly basis, you're going to see some a really interesting pattern here that I think you have to wait another couple of days to see if it's going to work. But give me 1 second to get this up here. And it is the pattern that I've circled here to look at. We have this big ABCD pattern that is completed. It looks like we've extended to the 1.27 level, but we've got a chance here for a shooting star pattern in this. That's where you go really high and close on the lows, or go really low and close on the highs. This is a very, very powerful pattern. It's something that you really need to pay attention to, and I'm just going to show you a couple examples here with this IBB, because it follows the shooting star pattern really, really nicely, because we've had 2 of these on the weekly basis. And I'm going to show it to you now. We had one in April of last year, and then we had one again in October, and now we have a potential one now. But it's a potential because it has to close near the low end of the range on Friday. And if we do that, that'll just be the 3rd one we've had here since last April. We had a buy down in April. We had another buy in October. And if the market closes, somewhere around 322 to 321, or even lower, the lower the better, because that means the shooting star has got such a strong probability of winning. Now, shooting star has to be out there all by itself, and it has to have a pretty good range, and it has to close in the exact opposite of the range that you're looking at. The market's been going up, so the exact opposite of that would be the market going down. I happen to know Steve Neeson pretty well, and that was one of his favorite patterns. You don't see it very often, and it's most important when you come in and you're looking at other patterns, in my opinion, like the ABCD pattern or the 3-drive pattern. So on the daily, we have a 3-drive pattern forming, and on the weekly, we have this potential shooting star. But like I say, it's potential. If this thing closes in the upper part of the range, there's no shooting star, and there's no signal at all. So you're going to have to wait until Friday. But if it does kick in, it's going to be a very, very interesting one, to say the least. That's the key that I'm watching here when I'm watching, some of the things that we're looking at. Now, we'll take a quick look here at the S&P because I want to get as many of these done before we have Arch on, so that we can take a look at what's really happening in some of these markets. We've completed a small ABCD pattern here yesterday in the S&P, almost exactly at the 50% retracement level of the previous swing. That made it a nice Gartley. And then we had the buy, which came down at the 2013 level. And then we had the rally up, and the rally up stopped exactly at the 786 of the previous move and 61% of the other move. And folks, I really think we're heading down to the 202 level, 2002 level in the S&P. That's what it looks like to me. I think we've got one more. I'm going to do it in sequence so that you can see what I think is occurring, because it's got a very nice pattern that should take us down a little bit more. In fact, I think we'd probably be heading down there today if it weren't for the, the price of Apple. I heard on the news, I believe, that they had something like $175 billion in cash. I don't think there's that much cash in the United States. That's a lot of money. A person got that kind of money can go out to eat a couple nights a week. But that's a good product, and it's certainly, giving people a lot of dividends today. We'll see if it continues to do so. But getting back to the S&P, we have an ABCD pattern forming down there at the 2,000 level, and that should be the first area of support. It's taken 5 days to get down here, so that's another reason to think that we are pretty close to a spot where we could get, one more rally from this level. And you'll wait and see. We're having very good swings. The Dow's moving, triple digits all the time, which is ideal, both up and down. So those are the types of things that you'd really like to take a look at. Now, in order to verify what we're looking at in the market, I always like to look at that New York Stock Exchange Index, because that is the best one for telling us what the real market is doing. And as you can see, we've had this same type of pattern in the New York Stock Exchange Index that we've had with the S&P, only this one is far more bearish, because we've had these markets have made lower highs all along. And this is, I don't see how you can call anything about this chart bullish. Frankly, if we had one really strong day where we were up about 4%, maybe that would be the case. But it certainly, doesn't look that way. One of the things that we're going to talk about with Arch Crawford at the break is the way that the advanced decline line is looking, and new highs to new lows, and to see, the overall breadth of the market. Arch is a master at that. He's been around, my gosh, I think he started on Wall Street with one of the deans of the people. I can't remember the guy's name. Arch will remind me, but that was, oh my gosh, 50 years, yeah, 45 years ago. Arch is 3 months older than me. He was born on J.P. Morgan's birthday, April 17th. So that's what we're watching here in this New York Stock Exchange Index. We've had these 3 divergences, and I believe it's very, very important. And I think we're going to have we're going to be starting down here pretty soon in earnest, and shake out a few trees to see if this market is going to have a big correction that it has the potential for. However, if we get that Dow above 18,000 again, all bets will be off, and we could certainly go, with the market, to the upside. We're having a lot of, news coming out of Greece, which I don't think has much to do with anything. It's only 1.5%, I believe, of the whole Euro group. So it's probably much of a non-event. It was once before. I know it makes the news, but, not much is really happening, with that, as near as I can tell. So we'll be looking at that. We've had a request on the Bradley model. If you give me a second here, I can get that up here, hopefully. I just had it redone, and it is showing a down move. This is the new Bradley. Well, it's the Bradley for this year, and we're going to put it in here. And you can see it does have a strong indication of a down move here, coming all the way into April. April. But you can see the 3 lower highs that we've had now in the Dow, and we've had some support at this 17,300, which has held pretty well. Basil's comments about the VIX is very important, because that VIX is a good indicator of when to see a breakout. And I believe if it gets above that 20 to 21 area in the VIX, we've got a chance for a pretty sharp move to the downside. But right now, what it looks like in the Dow, the S&P, the Nasdaq, even the Nasdaq, given the fact that we've had all of this news about Apple, even and Nasdaq stopped exactly at the Fibonacci numbers that that we were looking at just the other day. And so that's another reason to make me believe that this thing is still not out of the woods from the bearish side as of yet. So you'll see the picture in the Nasdaq, and instead of being just give me 1 second here, you'll be able to see how it's following this nice channel with the 3 lower highs and everything. It's technically a beautiful chart, and even as strong as the market is, and I better do something here. Hold on, I think I have to refresh something, otherwise I might be in some trouble. No, there we're okay, because I have a tendency to move around with computers, and I don't get the thing picked out like I wanted to. But we have the 3 lower highs there. You can see that 135 pattern that we've talked about many times before, and each of the highs was 786 of the other. And now we've had a little bit of a sell-off, so it's an interesting phenomenon that we have going on. We are pointing down in stocks, as near as I can tell. Looking at all these different indicators and everything, the Bradley model is telling us that we want to be short, so we'll see if that's going to be the case. Now, we have the Fed meeting today, which that always affects everybody, and it's usually after it's all over, not much happens, but sometimes there's going to be a shock here and there. But we'll see if it's going to be an interesting meeting like they usually have. They had one of the Fed governors on today, and he really said that quantitative easing didn't mean very much, and I just couldn't believe that was really going to happen. So we'll see if, in fact, that is going to be the case. We'll have to wait and see. Now, one of the market that's we had tremendous buildup in one of the questions I've had this morning is about oil. We've had, we got to take a little break here. We'll be right back. We've got the Dow up on the day, the S&P down just a little bit, and the Nasdaq stronger.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of the Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a quick look here at the crude oil market because we had an interesting thing happen this week so far. It's not quite finished because we got a couple more days, but on Sunday night, we had a lower lows in a couple of the contracts that are traded across the spectrum from February through December. Only two of those contracts made new lows. Some of the major ones like June and Dees did not make new lows, but they're still very, very close. The fact is it hasn't collapsed like it usually does after a 3-day rally. As you can see from the chart that I posted into Tiger TV, that we had 7 $4 to $5 rallies since July. Each one of them went into new lows. This time we had an $8 rally, and it's taken 2 weeks. And we haven't made a new low, so maybe selling is starting to dry up. I mean, it's just a foregone conclusion when you listen to the news that oil is going to somewhere between $28 and $40 a barrel. So there's going to be an interesting situation. This market it's one of the most oversold markets we've had in a very, very long time. So we'll have to keep a close eye on it. But we're starting to see certain signs of it. Now, there's one other thing that we look at, and that is that the heating oil has held the 786 retracement at the 160 level now for several weeks. That's another potential positive sign. That is also, and then gasoline has also started to have a pretty good rally. Gasoline has rallied, rather well here over the last few days, given the fact what we've had happen in the crude oil. We're going to cover more of this on the commodity show tomorrow, but I just wanted to let you know that it's getting close. It hasn't quite, reached the area where We thought we were going to have a huge move here in crude oil yet, but we still think that's coming just from a short covering basis. But I'll put the gasoline in so you can take a look at it, that it's actually held rather well. In fact, we're actually trading up on the day today, and we've held the lows from 2 weeks ago quite nicely. But crude oil, of course, has sold off against that. So those are the main ones that we're watching. Someone's asked a question about the next level in Apple. We mentioned several times the only way you can play that market in earnings, I believe, is to do the puts or calls. And it had a tremendous move, and it gapped up a great deal today. It went way above the 786 level, which came in at 116. We're trading about a half a dollar higher than that, and we're not very far from the new highs that are out here too. So we could very easily I have to take out one of these studies because it clutters up all the lines, and I don't want to do that. There we go. You'll see we have a shooting star on this one, but it's a shooting star on the upside. So it's you just have to wait till the close. There's just nothing you can do about it. But right now it looks pretty good. I mean, we're trading at 108 yesterday, and today we're trading at 117. So that gives you an idea how quickly some of these things can move, especially Apple with the earnings. I think it's something like 78% of the time the market gaps up with Apple, and I think that goes back for a long time. I heard those statistics a few weeks ago. I didn't write them down, but I think I'm pretty close to what I thought they were trying to say, that the odds are that it would be going up. That pattern that you're seeing in the Apple is a hammer. If Apple was on the downside of that, now the hammer is up right now, but if this were to close down on the day, that would be a shooting star. Now, for Apple to close down on the day would be some type of a miracle. It would probably be on the order of parting of the Red Sea, if it would do that. But that's the difference between a hammer and a star, is where they close. So that's what we're watching. We're going to have Arch on here at the break here. So one other thing I did want to mention is about the Fed meeting today. I'm not sure what they're planning to do, but I think they fired about every gun that they can possibly have. And we'll have to just wait and see if they're going to be a situation where you have, another big surprise of some kind. I mean, they're just giving us free money, all the time. And they don't give us any free money, but they give it to the big banks. But that's just the way the economy's run. So there's nothing else, we can do about it. I wish we would have a candidate that would come in and give us a flat tax, and that would take care of all of our problems. And I think we would, everybody would be a lot better, if we had that, but whether that's the case or not. We've got the Dow up about 70. We'll have Arch Crawford on after the break. Gold down a little bit, and silver up a penny or two.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I think we have our friend Samuel Archibald Arrington Hicks Crawford. Sam, are you there?
I am here, brother.
Hey, I couldn't remember. The guy's name was Bob Farrell that you worked with in New York, wasn't it?
That's correct. And from the early 60s, he was head of technical at Merrill Lynch and was always voted the best in the field in the was it institutional investor polls.
Mm-hmm. Well, I know you've finished up in that top 1, 2, or 3 many times yourself. So listen, what I've decided to do, hopefully it's okay with you, is I posted one of your charts from your newsletter that I have. It's about the 52 weeks new highs in the New York Stock Exchange Index. I posted that so our folks at Tiger TV can take a look at that, and it just looks like a very big distribution of stocks to me. Could you explain to the folks what this is, Sam?
Yes. Well, in a bull market, you have the number of 52-week new highs generally rising. But so far, they've been declining since the 20th of May of 2013, which happened to be one of the Uranus square Pluto days. And that's a 10-day moving average. So that's the way it's going. And it's been hitting lower and lower and lower highs. And I caught it up to date this morning with yesterday's figures, and it's about a tie with the previous high, and it could break out to the upside without much further goings on. So I'm watching that carefully to see if it will or if it will fail again. In the meantime, the number of new lows I consider dangerous when you've had over 43 days running. Well, we did that back on the 13th of January, and the top was right around in there, as I remember. And then we had 3 days. It was like 148, 130, 224 new lows. So that was, then it came down and had 1 day under 40, which was 4 days ago. It was 34. Then it's been in the 40s the last 3 days, the number of new New York Stock Exchange new lows, not the new highs here. But that has given a refreshed negative signal. But the new highs have been doing much, much better. So everything I have to say today is that we are in the middle of deciding whether to go down further or to rally. And it's touch and go right now. And if you look at the Dow or the S&P charts, I'm looking at the hourlies right now, and they're triangulating, with higher lows and lower highs. And so when they get out to the end of this triangle, before they do that, they've got to break out one way or the other. And what you'd want to see to be bullish would be back above 2060 on the S&P, or back above 17,820 on the Dow Jones. And to be bearish, you would want the S&P under 1990 and the Dow Jones under 17,280. Now, the Dow has been more steady in these series of lows, has been around 17,280 plus or minus small amounts, whereas the S&P has had a much broader and choppier in its pattern of lows. Now, right now, the Dow came all the way back down to the bottom of the triangle yesterday and bounced, but the S&P is only back about halfway down. So the S&P is acting much better, and I would consider that in itself a positive case.
Mm-hmm.
But
one other question I have, Sam, that some of our listeners have asked about is the Bradley model. How would you interpret that, the interpretation of the Bradley model so far, and, what is your overall feeling on it?
Well, I'm sorry you asked me that, because I've had some real serious computer problems, particularly with mail, but also other things. And I was moving my home and office, and I have not even looked at the Bradley model for this year.
Well, it's pointing down till May is what it's looking at. I posted it into the room today, and it peaked right when it should have, and it looks like it's heading down. Are there some really strong astrological things around your birthday, April 17th, that would pull the market down?
Well, I'm looking at the middle of January was some of the roughest period, and now the next roughest period is around the 10th to 23rd of March. I haven't, again, looked out into April yet. Well, we do get the total solar eclipse on March the 20th, but we have Mars conjunct Pluto and squaring Uranus on March 11th, and I think that is an extremely dangerous time, particularly for touching off a big-time war. I remember when we had one like that, it was Saddam Hussein attacked Kuwait, and then we went in there a few months later. That was the first time.
That eclipse happens right on the spring equinox too, doesn't it?
Yes. As a matter of fact, the last three, equinox and solstice and equinox again, we're having major planetary events within hours of the actual equinox, solstice, and the equinox in March. This a total solar eclipse is this one. I think the one in September had Pluto going stationary one way or the other within, I think, 2 hours. And then in the winter solstice on the 22nd of December, we had Uranus going stationary one way or the other within 19 minutes of the solstice. And then this one, we get the solar eclipse. That means there are big things happening in the world. And you could have predicted that, 50 years ago. But I think if you've been reading the newspapers at all or watching the TV, you know that really strange and powerful things are occurring in the world.
That's for sure. That comes on a Friday. That March 20th is a Friday, so that could be one active weekend, couldn't it?
I intend to be short for it.
Well, Mark, excuse me, Arch, you're short every weekend. So no, folks. That's a standing joke between Arch and I. And when I refer to Arch as Sam, Sam's his nickname because he has a cousin that's named Arch, and so we've always called him Sam. So anyway, that's good. Now the other question that I had.
For my family or business, I stick with Arch.
You do? Well, that's always good. Just make sure you're never late for supper. That's the main thing. Now, the next chart that I wanted to talk to you about that I've posted into Tiger TV is the U.S. dollar index, the monthly chart there. And you've got some really nice indicators there. I thought maybe you might explain them because this was done several weeks ago, and we've actually hit that exact number in the U.S. dollar index that you had there at 95.74. That was the 50% retracement coming back from 2000. So do you think that's a pretty significant level up here?
Yes, it is. Of course, it has broken above a series of patches over several years. So it has broken out to the upside, but running into the 50% retracement could put a crimp in it for right now. But as long as the problems are happening in the rest of the world, the money is pouring in here because we are the tallest dwarf in the room and the prettiest horse in the glue factory, but with the dollar. But we don't know how long anything is going to last there. All I can say right now is that technically it's got a long way to go to break any previous lows or a moving average or a trend line. So
Sam,
it's up in the air right now, and I'm leaving it alone.
Yeah. Sam, one of your best predictions has always been in gold. You've been really superior in both stocks and gold. It amazes me that gold's not at $3,500 an ounce, given all the stuff that's happened with quantitative and easing and all this other things that have occurred. What's your feeling on the gold market here from an astrological standpoint?
I'm buying the dips. Short term, I'm looking for a large change in price of gold or silver either way on March the 13th, and specifically a inflation and metals up March on that full moon 20th to 23rd of March, covering the vernal equinox. So that could be a short-term high, but it should be up really big around that few days.
On the long-term chart, when you look at gold on the yearly basis, the correction that we had down to $1,100 an ounce was nothing more than a 62% retracement of the low from 2003. So this could actually, I wouldn't be surprised to see gold make new highs. I really think it has a chance if it can get some thrust out of here above $1,400 an ounce. I think it could really move quickly given all the things that are happening in the world.
Absolutely. I have the XAU here on a daily chart, and it's between the 50-day and the 200-day moving averages. It's above the 50 and below the 200. So you've got resistance above and support below. But I'd like to see the XAU over. If it hits 90, it'll be above the 200-day, and if it hits 70, it'll be below the 50. So those are the general that I'd look for in the XAU now. I don't have the gold chart up on this machine, I'm afraid, but it has. I was hoping for it to break above 1260, I think, in the newsletter. The last couple of them. Yeah, here's the chart that's in the newsletter. So I said, it broke to new low, must regain 1260 soon, or more trouble. And of course, it went up and hit above 1300 on the future yesterday or the day before. So that has the first technically really strong thing that we've seen in the gold, and I believe it will go. I think you're right about the 3,500. That at least because of they've printed like $7 trillion. The 3 or 4 central banks, and the thing is, it's staying in the banking industry, and it's not being loaned out, so that it's not increasing the money supply of these countries as much as it might. It's going into property, and it's going into stock markets, which give the impression that everything is just fine and dandy, when the underlying conditions are deteriorating horribly.
Sam, if the folks want to get a copy of your newsletter, how would they reach you? What's the best way to go on the internet?
Well, the best way is to go to the website, which is crawfordperspectives.com, and there will be several of the recent newsletters there if they've never seen it and want to look at it. And also a place to sign up if they so inclined. The phone number is 520-577-1158, and you can find our address and phone number on the website also.
Well, that's good. Well, listen, I want to thank you for being our guest, and we'll have you on again pretty soon, probably in that March time frame, what you're talking about.
Okay, well, if they call now, we'll be glad to send them the January issue free. The next one will be out next Monday, February 2nd.
Sam, we have a caller calling in right now, and we're going to answer his question, but we're going to come into a break, but have both of you stay with us. We have Mark on from Colorado. Mark, are you there?
Yes, I am.
Okay, you've got Arch Crawford on the phone. Go ahead and ask your question.
Yes, Arch. What I wanted to ask you was, since Mars is into Pisces of the day, and there's 2 other planets also in Pisces, is it bullish or bearish for the market, or is it a short-term or long-term higher or low in the market?
Well, generally, Mars is happier in fire signs and unhappier in water signs.
Sam, we got to take a break here, buddy. Come back. Stay with us. We'll be back in about a minute and a half.
Okay.
Okay.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Darrell Martin here on TFNN.
Okay, we're back, folks, and we're talking with Arch Crawford of Crawford Perspectives and Mark from Colorado. Mark, would you repeat your question on the Mars Pisces, and then...
Yes. First of all, Larry, this is Mike Chalik, not Mark. I had talked to you.
Sorry.
That's okay. No, that's fine. What I was asking was, is that Mars goes into Pisces, and in fact, looking at PlanetWatcher.com, I noticed it's about 1 degree into Pisces now, so it just entered into it.
What are you talking about, Pisces? Are you talking about? See, I'm looking at it in ecliptic longitude, and it just went into Aries. Now, if you're talking about equatorial longitude, which is the way the Vedic people look at it, it'll be a different sign.
Yes, right.
But it's in Aries now, and it's getting ready to conjunct with Uranus and square Pluto on March 11th, and that's what I'm concerned about Mars.
Oh, I see. All right. Well, what I was wondering is now, we're talking about now or the day, because I noticed that there's 2 other planets in Pisces right now other than, did I say Mars? I meant to say Venus. I believe Venus goes into Pisces of the day. Am I right?
I think Venus has been in Pisces all month, and it goes into Aries. It went into Aries on the 20th. And Mars went into Aries on the 19th.
All right. What planet changed zodiac of the day or yesterday?
The Sun went into Pisces on the late on the 18th.
All right, and there was no other ones, no other planets went in
Venus
at all?
and Mars.
Venus and Mars, yes. Venus, I think, did, right? Did
They
Venus
both went into Aries, and the Sun went into Pisces.
I see. All right.
The other planets in Pisces, Neptune is at about 7, and the Sun is just entering. It's now about 6 or 7. So we're going to have the Mars and then the Sun and then Mars and then I think Venus first and then the Sun, Mars and then the Sun are going to conjoin Uranus and square Pluto. So I think while those are happening, it's going to be very, very dangerous on the Earth in terms of anger and things blowing up and warfare. And even you may get mad at your spouse. Who knows?
Well, what I'm looking at right now, Arch, is that Venus, Neptune, and Mars are both in Pisces. Is that a volatile situation?
That I don't know. Say that again. We just said that Mars is in and Venus are in Aries now.
Well, no, I'm looking at it now on planetwatcher.com, and I am using geocentric, not heliocentric. Okay.
No, I'm not using heliocentric. I'm using geocentric. But there's two ways to look at geocentric, and one is ecliptic longitude, the way astrologers look at it. Then the other way is equatorial longitude, the way astronomers look at it. But Mars and Venus are not going to be more than a degree or two off on that. So you're looking at something different.
Well, then I have to tell you this. Then I don't know what bias the planetwatcher.com uses. Then I don't know if
it has to be Vedic.
Equatorial.
The Vedic tradition. They're using a different
Sam,
system.
we gotta leave here, Sam. Thanks for calling in, buddy, and we'll talk to you soon, okay?
All right, thank you.
Okay,
Bye-bye.
thank you, Mark. Bye-bye.
Okay.
Thank you, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.